good numbers yesterday, and of course, very good sales number for the month of October coming in this morning as well. Stock up about 1.5%. Bharat Madan, Group CFO at Escorts, is with us. Mr. Madan, first let's talk about the earnings. Good numbers coming in for you. Top line growth of 15%, profit up 32%, margins slight contraction or rather just about stable. Talk to us about the highlights from your end.
Yeah, I think the numbers were on the expected line. So we had actually indicated earlier that Q2 will be slightly slow quarter in view of the base impact of the GST transition for a year before, and also the delay in the festive season, which now I think most of it shifting to Q3. So I think the numbers overall top line was in line with that, though I think we had got very good numbers coming in from the construction and daily side, which was a little bit of positive surprise for us too, which is what I think we're not expecting that sort of number, especially in the off-season months of the monsoon when the construction demand typically is low. But overall, I think both sectors did deliver 40% plus growth in the first 6 months of the year, and the momentum continues, which is, I think, a positive sign for us.
What do the inventory levels look like at currently? How are the channels right now?
Well, I think normally since we had a very strong festive season coming up in Q3, so normally inventory levels are pushed up in the channel in September. But the entire correction is going to happen in October and November when the festive season is on. And you've already seen the numbers coming in October with the retail have been very strong. This was the highest ever recorded retail numbers in the month of October. So which is a very positive sign. I think by the end of November, I think most inventory levels will be back to the normal levels with the 3 to 4 weeks sort of average.
So you're saying in next couple of months should be good as far as the trickle down to retail level is concerned, because wholesale numbers are very strong for you.
Yeah, that's right.
Okay. Give us a sense of the input cost price pressure, because we've seen that for some of your other peers as far as Q2 earnings goes. How are you managing the cost pressures over there?
So we had taken the cost increase on the tractor business side, I think in Q2 too, and we're taking some increase in Q1. So overall, so far, whatever inflation has been there on the commodity side, we've been able to pass it on the tractor business. Though we're facing a bit of challenge on the construction and railway side, the railway typically they are the fixed price contracts, so whatever order book we have to deliver on that. So be able to take any price changes there. And construction too, though we've taken some price increases in the last 2 quarters, but still the entire absorption hasn't happened in the market, so we're still taking some hit on the P&G, which is why the margins seen in the Q2 in construction business has been slightly under pressure and more or less flat compared to last year. It's part of the better operating leverage, which should have been actually there. So we are looking at taking another price increase going forward, I think on the construction side too. So hopefully things should look better, I think, in the next 6 months, which is again a very strong season for the construction period.
Set an internal target for sales for Q3. What's that number looking like?
So we had predicted very strong growth in Q3 and then maybe very minor or muted growth in Q4. So overall, we are still maintaining the guidance for industry at 12 to 15%. But like I said, I think Diwali season is very crucial for this entire number to really get confirmed. So we'll rather wait for November. Until that time, we are holding on to our guidance. And then by end of November, we'll have more clarity to the overall how the numbers for the industry going to look like.
Understood. Also, give us some color on your railway order book. How is that looking like currently, and what can we expect in terms of growth over there as well?
So railway, like I said, in the first 6 months, we again more than 40% growth in railway business, and we'll have a good margin expansion coming on the back of operating leverage there. And we have a very strong order book of 400 crores plus as of end of September, which will get executed in the next 12 to 13 months. So I think this year, overall, full year basis, we expect railway business should be giving us a growth of 25 to 30%, with a very decent margin expansion of 2 to 3 percentage points for last year.
All right, Mr. Madan, we'll leave it at that. Thanks so much for joining in. Good luck for the quarter ahead. That's Escorts for you. Good set of numbers coming in, and sales have been strong. They're on track to meet their sales guidance for the rest of the quarter. 12 to 15% growth is what they are expecting. A little mixed, a little soft because of some delays in festive demand, but that should negate in this quarter is what the management is telling us. 1.5% up in trade. Last couple of days, this stock has been on a strong up move. Looking at the market action though, at this point in time, turned soft, given up 10,400 now at about 10,000.